Lori Calvasina of RBC says the potential for tariffs from Mexico make it even more likely that the S&P is going to fall to 2650 this summer. And Lori joins us now. Lori, what do you do?
So in the short term, we've actually been telling people to do something we really didn't want, but that's to buy utility stocks. Whether we're looking at Mexico, whether we're looking at China, this is the one sector in the market that really doesn't seem to be caught up in the trade war. So we think it makes sense to add some defensive positioning right now.
What do you make of the fact, though, that volatility has not really been that elevated? It's been orderly. The last 5% has been orderly.
It's really interesting. So we watched the CFTC data on U.S. equity futures positioning really closely, and it got us worried back in April. It was getting close to last January, last September's highs. Back in those episodes, it plunged. It just shot straight down. This has been a very orderly unwind. And I think in addition to assessing the risks to different sectors, to different stocks, I think investors are really trying not to overreact in the short term. They're trying to say, what is the reality? What are the probabilities that these things actually go through? So they're gradually taking down risks. They're moving in a more risk-off direction, but they're not panicking.
If you're drawing in your horns, if I can put it that way, just a bit, what does that say about small caps? Because often, particularly when it's a trade issue, you think maybe you're better off in small caps.
So the problem with small caps is they're cheap. They're cheap for a reason at this point in time. If you get a positive catalyst, say all these trade issues, we wake up to a couple tweets and they all go away, you'll have a great rally there. Threats to the U.S. economy will be minimized. I think the other issue beyond sort of the damage to the economy that's hurting small caps right now are the margin pressures. And that's what we hear from a lot of companies is these tariff issues. They're sort of manageable in the short term. They're not manageable longer term. That's really a big cap thesis. These kind of smaller incremental margin costs, tariff costs, are actually much more difficult for the smaller companies to manage.